Hi folks, David Waring here again with LearnBonds.com, and today we're going to talk about how to avoid getting ripped off when buying bonds, the unique features of every bond, deciding on what type of bond to buy, and more. Before you buy bonds for the first time, it's important to understand the basics. First and foremost, buying bonds is not like buying stocks. Your bond broker is not required to give you the best price available when you buy a bond, and many bonds do not trade actively enough to get out at a good price if you need to sell. You can trade bonds either online or through a full-service broker. Whichever route you choose, you want to make sure that the broker gives you a full explanation of all the costs involved, including commissions, and whether or not they mark the price of the bond up when you buy and sell it. There are many things that are not standard about the bond market. However, there are unique features to every bond, including CUSIP number, whether it is a callable bond, par value, credit rating, maturity date, and tax status. While the level of risk also varies when buying different types of bonds, every bond has interest rate risk, and most bonds have default risk and liquidity risk as well. If you're not familiar with these topics, then visit the educational links below this video. Which type of bond should you buy? There are three primary factors which are going to influence your decision on which type of bond to buy: credit risk, interest rate risk, and how interest income is taxed. Treasuries are the safest from a credit risk standpoint, but remember they still have interest rate risk. If you're in a high tax bracket, then you may want to consider municipal bonds. If your primary focus is yield, then you may want to venture into the corporate bond marketplace or even the high yield bond marketplace. We have sections with tons of information on all the different types of bonds here at LearnBonds.com. If you'd like some additional ideas on which bonds to buy from the staff and guest writers here at Learn Bonds, visit our section on bond trade ideas, which I've also included a link to below this video. With all the talk about interest rates moving higher, many people in the trading community are now asking, can you short a bond and can you use leverage when buying bonds? While the answer is technically yes to both, most people find it easier to do this using bond market ETFs. For those that want to know more, you can read our article on how to short the Treasury market using bond ETFs, which I've also included a link to below this video. That's our lesson for today. For more great bond news and education, be sure to visit us at LearnBonds.com, follow us on Twitter at LearnBonds, and like us on Facebook at Facebook.com/LearnBonds page. Thanks for watching.